Good afternoon. George Cavaligos for DragonSlayer. Oh, a little bit rocky morning. Got stopped out of that first long. I think I had my stop too close. I got to remember to give it a little bit more room in the mornings when the markets are very unnerved by what's going on in Europe. In the afternoon, we can probably run a tighter stop because it's just the States and things seem a little bit more subdued here. Even though stocks sold off very hard after the Europe close, they did rebound tremendously into the afternoon here. We've sold off from the highs. You know, a lot of this 3 steps forward, 2 steps back kind of stuff again. We did close positive. We didn't close poorly like we did yesterday. The one tick lower low last night, man. I hope some of you guys were able to catch that. I wasn't around when it happened, unfortunately. It's almost like you got to be there 24/7 to catch every one of these little moves. Would have been a great buy. You know, I think our low was, 19 plus yesterday. Sat around those lows all day. Couldn't get any oomph on the upside going all day yesterday. Last night they make a half tick lower low and immediately we start going bid. Well, we know where the demand is for this thing, obviously. We saw the Fed in buying 7 to 8 years today. That kept the 10-year going stronger again. Made actually new highs by 2 ticks. Again, that 3 steps forward and 2 back trade where, you guys, if you're long, you definitely have to get out on new highs and take profits. And maybe even try it from the short side there. We had a nice pullback. We went from 133.04 all the way down to 132.28, I think. I highlighted that 27 plus the 28 plus area as a spot to buy it. We trade up to 31. I said get out of half of them there. Got stepped out of the rest for a scratch. And we went back down to 28. We tested that low again, and now we're bouncing again. So I want to keep buying dips. Europe's still a mess. With the equity recovery here on the close, I think we could see a little bit of follow through this morning or tomorrow morning. We also have the 10-year auction tomorrow, so we will see dips. I think the Fed is buying tomorrow a little bit. I'm not sure. Don't quote me on that one. I'm going to have to check the Fed schedule again to make sure what they're doing tomorrow. But the 10-year auction is obviously going to be tomorrow. It will probably go pretty well, probably not as well as the 3-year did today. We'll see. The markets are very dynamic at this point. We made new highs on the bonds today for this move up. We're still below sort of the old highs there in the bonds. We're not even close. If you keep that chart I sent out this afternoon on the bonds, we've got some pretty important resistance. Another, half point above us here. We got up to, 144.28 in the bonds on the highs today, 29 maybe. And we really don't have much in the way of resistance until we get up to that 145.08 to 15 area. And that's big, though, guys. There's old daily highs, old weekly highs, fib retracements. Sort of the trend line off of all the old highs is right in that area, too. So kind of interested to see how the bonds do up against that area. What else? I think that's it. Oh man, stepped out of my last little gold position this morning. That was nasty. Did not like that. And we'll move on. We'll try to catch some more of these moves here. We learned today not to keep our stops too tight in the morning, and maybe even be more patient. The high risk or the high potential trade was that afternoon sell-off where we had the real nice, C equals A on a very short-term chart. If you look at like a 5 or 10 or 15-minute chart, and you look at the move down from the highs, we went from 04 down to what I want to say 31, back up to 01, and then back down to that 27 plus 28 plus. That was your equal swings. It's a very, very common corrective pattern in Elliott Wave, and it's one of my favorite trades. After you see a move up or a move down in a trendy market, you get those ABC corrective moves. That's where you can get your good risk reward in and get long that dip, and not have a crazy far away stop level either. You can keep a pretty tight stop on those trades, especially if the market's trending like we sort of seem to be at this point. even though the fact that we keep making minor new highs and then selling off fast is not what I would call a classic impulsive move. It certainly doesn't look like it on the charts either, you know. All right, guys, looking for that upside target, that 133.06 level. Kind of fits, right? 02 high, 04 high, 06 high. We keep making new highs by 2 ticks. It's going to be really interesting to see what happens up at that 133.06 level, too. Again, there's our equal swings kind of move. But on a bigger chart, if you look at the move off the lows from, let's see if I can look at my chart here. The lows from 131.31 up to 132.22 plus, down to 19, and then back up. I think 06 is equal swings on that upside. I might be a little off on that. I'm trying to look at a chart and it's far away from my view right now. But when I did run the chart the other day, 133.06 equal swings. If it stops there and we get a big bear reversal, that could be something we might want to jump on with both feet on the bear side. I don't want to preempt stuff, but it's one of the plans to keep in mind right now, you know, somewhere in the back of your mind. If we touch that 06 level, take profits on your longs, and if we start getting decent reversal signals up there, jump on it with both feet on a short. Okay, laid out the game plan for tomorrow. Let's see what happens. Play the auction tomorrow, all right? Have a great night.